someday. This could really help you think through some of your career goals that ultimately would get you there. Um, but with that, Jessica, I think I have a co-host now, but your screen is still being shared. Would you mind if you stop sharing it and then I can share? Perfect. Okay, great. Um, let's see. Can everyone see that now? Okay, I'm getting nods. Perfect. I can't see the chat anymore, so that if you guys are asking questions, Carolina, let me know. Perfect. So, venture capital is all about investing in innovation. So it's living on the edge. And we already talked about this, but I'm Madison. A little bit more personally about me. I grew up in Seattle, Washington. I have two little brothers who I love, but they are hilarious. I went to college at Dartmouth on the East Coast and then was back in the West Coast in California for 5 years. And then, as Jessica said, I just wrapped up my MBA at Harvard and I'm moving back to California this fall, and I'm very excited about it. So we already went through, kind of what I've done in my early career. So let's dive straight into the venture capital ecosystem. I like to think about the venture capital ecosystem as a three-legged stool, with each of the legs of the stool being these three key partners. A stool would fall over without each leg. So this is incredibly critical to how you think about it. We often hear about venture capitalists and entrepreneurs in the headlines. And I think we hear less about limited partners, but they are just as important, and some could argue more important, to making the entire stool stay upright. But we'll focus our energy today on venture capitalists. But to start us off, right? Well, they are really the people who sit around and say, "Hey, is this startup where we want to put $1 million?" And in that question, they're thinking through a host of things. Is this the best entrepreneur for the job? Is this industry? Is this idea compelling enough to put this $1 million to work, as people like to say? And ultimately, they are with those entrepreneurs for the life cycle of that company. I say life cycle because we'd love all companies to go public or return those millions of dollars, but sometimes they don't. Sometimes they also fail. And so it's really about being there through the beginning to the end, no matter what the end looks like. And of course, you might be wondering, where did that $1 million come from? Well, yes, it is the venture capitalist $1 million to deploy. It is also limited partners who bring in this capital to actually get to put to work on behalf of the VCs and on behalf of the limited partners. So limited partners can be anyone, high net worth individuals, but more often not, it's endowments, nonprofits, pension plans, really important large pools of capital, often billions of dollars that they have, which is an incredibly large number, but is important to think about because their goal is to diversify their risk. And what I mean by that is, yes, you could put all your money in public markets. Everyone can do that every day. Yes, you could put all your money in bonds. You could also do that every day. But that's not going to give you the best, quote, risk-adjusted return on that capital. And venture capitalists are what people like to call an alternative asset. It's something that is an alternative to these publicly available assets. And it's important because it often returns more than those markets, or at least that's what venture capitalists like to say. And so the data also backs it up. Limited partners think and every day about how they want to have this portfolio adjusted relative to their risk and return profile. So that is just one way for you to think about all of the stakeholders at play. It's not as simple as just I VC give you entrepreneur $1 million. The limited partners expect a return on their capital, and every day VCs are thinking about how do I return that money because it's incredibly important to do so. Um, and if you take a step back, you probably know a lot of people who are by name of, famous venture capitalists or famous VC firms, right? There's the Sequoias of the world, the Andreessen Horowitzes of the world. And then, of course, there's the entrepreneurs like Mark Zuckerberg or, Steve Jobs or Bill Gates. These are all people who fall into those buckets. In the VC landscape, though, which is our focus for today's call, there are established managers. Venture capitalists are often called managers. They have been around for decades at this point. VC was an asset class that was formed basically with the inception of the internet in around the 60s. So we're coming up on about 60 years of venture capital being like a traditionalized, institutionalized investingable job and career. But I'm really interested in emerging managers. I worked at an emerging manager. I joined them when they were in their second fund. They had raised at that point about $400 million to deploy into startups, early stage startups. And we can talk a little bit about, early stage, late stage, all those types of framings. But the reason I love emerging managers is because they're kind of a startup within themselves. They are entrepreneurs, right? They get out there and they say, hey, I have this pool of capital and I think that I can do just as well, if not better, at selecting incredibly generational defining companies. And I'm going to go do that. And so this is an important node in the ecosystem. There's not just the big guys at play. There's also this pool, if you will, of VCs. And what I think is really important, especially for this call, as many of you are based in Africa and thinking through how you're going to be investing into your local communities, investing into the continent, there's a lot of emerging managers popping up that's focus is investing in Africa. And that is really exciting. And I think that those are very likely the type of venture capitalists you would be turning to if an entrepreneurship path is for you, based in the continent, based in your countries. So, what does that process look like? You have to go through like all these different components to actually becoming an emerging venture capitalist. And these are some of the benefits as well of what that might look like from an LP's standpoint. Taking myself back to the point I was making around why limited partners invest. Well, they might think this new manager on the block is going to do better than some of the existing managers. And so that can excite them. Just like I said, a VC investing in an entrepreneur, they think that's an interesting, exciting thing. So you can see some parallels here in the stools and how they all cut, like kind of the legs of the stool all work together. And just to double click into that, this was really going to also flow into, also how entrepreneurs, VCs think about entrepreneurs as well. So from an emerging manager standpoint, you want to have a differentiated investment strategy. You absolutely need to have a network. You need to have character. A lot about investing is having high integrity. A long-term mindset. A lot of these companies take a lot of time to actually return capital. And then there's this interesting thing called a track record. So if you're thinking about venture capital as your career, when you're getting started, everyone knows you've never invested in a company. That's totally fine. But as you progress in your career, as you start to really have been in it a long time, it's important that you've invested in some good companies, right? People want to know that you're going to keep investing in great companies. And a huge indicator of that is actually having historically invested in great companies. And that's what people call a track record. So again, if you're thinking about VC is what you want to do with your career, these are important components to over time what's going to matter when you become a partner. But I think it's something my dad always says is you have to practice like you play. So I think it's important, even at an associate level, even at an analyst level, to keep these types of things in mind for your long-term career. Taking a step back, this is a bit of a slide that just covers over the last 3 years some incredible shifts we've been seeing in the market. It helps to ground us in why venture capital is tied to public markets, even though at the end of the day, it's quote private markets. It also is important to think through those trickle down dynamics to the entrepreneur. So when people say things like this is a really frothy market, or this is, a really tight market, people were saying there's a lot of cash, there's a lot of liquidity out here, and we are deploying it. It is getting out into the hands of entrepreneurs, which of course we love to see. 2021 was an incredibly frothy market. I was investing in that time. You would meet an entrepreneur, and oh my gosh, they would already have a term sheet. They were starting raising yesterday. I mean, just things like that that were really insane timing. Then we went into kind of more of a slower market. And that's reflected in the IPO number that I have on top there. IPOs are a helpful indicator of where just like liquidity is in the market. And this is important again for VCs because ultimately they have to return that capital. And IPO is one avenue, one path to actually returning your investment, getting that capital back to those LPs. But 526 LPs over the course of, or sorry, IPOs over the course of 3 years is not very many. That is actually like at an all-time historic low. And then you can see in Q1 that only $15 billion, I say only, I know that's crazy, but only 15 billion were raised by VCs themselves, which is the lowest quarter of venture dollars raised since Q3 of 2017. So that's nearly 8, 9 years ago, which is just an indicator again of the markets change. And if you are actually an entrepreneur in the room, it's incredibly important to think through where is your capital coming from? Is it an easier market? Is it a harder market? Because unfortunately, that just is going to mean it's that much harder for you to raise your capital, even if you have as good of an idea as you would in a frothy market, as a bear market. It is going to impact you. And so your storytelling becomes even more important. Your traction becomes even more important. To give an example, there were companies that were raising at millions and millions of dollars valuations with absolutely zero revenue in 2021. And that's just not going to fly today. People are holding companies to much higher standards. And that is actually a direct result of this lack of liquidity in the macro market because people have to have a higher threshold for how they think about what and when and why they're going to deploy again or put that capital to work. Okay, let's talk about some of the fun stuff. This is like a little bit of how can I think about who a VC is? Why would I want to work with them? Because one of the coolest things about venture and being an entrepreneur is when you're an excellent entrepreneur, when you are like, the one everyone wants, it's like you get to have your pick, right? People are coming to you to say, I want to invest in your company. And so it's important to think about that, right? Like, who would I want on my cap table? Like, who do I want in my corner? And there's been this kind of evolution of venture capital over the last 30 years or so for kind of how people tell their stories. And that's something that I really had to learn on the job. But in the 90s, if you were a VC, you were a VC. You were investing in the internet. You're maybe investing in some hardware. Being a VC was enough. Like that was all you had to be. And so we often call those people generalist investors. Generalist investors can invest in anything. It's what the name describes, right? But as there became more people coming into the asset class, right? We talked about that earlier, the alternative asset class that venture capital sits in, there's more capital being deployed. It got harder. It got harder to win deals. It got harder to get LPs to say, hey, what you're doing is like actually interesting. This is differentiated. And differentiation is super important in being a VC. So then I would like to say that in the early eights, like there was our aughts, there was verticalization. There was this idea of, okay, hey, like, well, let's invest in this geography. Let's invest in these type of, like let's invest in more like actually, I guess verticalization was like, we're gonna only invest in software companies, or we're gonna only invest in consumer companies or hardware. We broke it out into these kind of more niche verticals. And that still exists today, by the way. There are fintech firms, there are crypto firms, there are prop tech firms, and that is their mandate. That's all they invest in. And that was yet another way of differentiating themselves. Then in the tens, we saw this shift towards identity and verticalization there. So that could be geography, it could be gender, it could be race, it could be some other form of identity, like maybe sports, right? Like we're a sports-backed venture firm. It's kind of vertical, it's kind of identity. People really got creative here on this definition and went to market raising with this framework. At the end of the day, this can be a strategy. It can also be marketing, right? It's also about telling your story. And so that's why, with the increase in social media and the increase in the ability to tell your story online, I believe we're in the era of people as a platform where actually you yourself, as the investor, have a platform. Platforms are traditionally used to denote things like marketplaces. Facebook is a platform, right? But people have become platforms. Their networks, the way they tell their stories. It's all about who you are, who you know. And I think that is an important component to whether you're at a large VC firm, you have to say, hey, this is why you should work with us, and this is why you should work with me. And then, of course, if you're starting your own venture firm, that's also really important to tell your story. Which kind of brings us to me a little bit and the Room podcast and how that fit into my career from a VC perspective. So Caroline met me when I was much earlier in my career and I was getting started at Defy, which is the firm that I worked at starting in 2020. And 2020 was an interesting year. I joined that firm 6 weeks before COVID hit. And I'm sure all of you have your own COVID stories. And at some point we can talk about those for sure. As a young professional working in COVID, the one number one thing people told me to do to be a great VC was get out and meet people. They were like, go to happy hours, take someone to coffee. I was like, great. Like I could do that all day long. I actually don't drink coffee. I drink matcha, but that's neither here nor there. And 6 weeks in, I was like, what the heck? I have to stay at home. Like, I'm gonna fail at this job. Like, this is gonna be so freaking hard to meet people. But I got really lucky. I had a best friend who was becoming a founder, so a full-time founder. She was leaving her job. And we were always talking, helping her think through things. And I was realizing, gosh, like we have a lot of questions. Like we have more questions than answers at this phase of our career. What could we be doing to both get ourselves those answers, but also tell our stories better? And also, what we like to say, open the door to the room where it happens, right? These are really closed doors, and we want to have more people who look like us, sound like us in those rooms, and also learn ourselves along the way. And so this is kind of a back-ended way of saying, one of my edges, one of the ways that I've been able to differentiate myself is through the podcast. It has become a platform that we've been doing now for 5 years. We've had 12 seasons, 120 guests. The guests have had over 100 billion in enterprise value, which is just a mind-blowing statistic. We were able to be on the Forbes 30 under 30 media list for kind of all the work that we've done with this. And super proud of this. At the end of the day, like this isn't my investing career, but it's been a huge compliment. It's been a flywheel. It's been a way that I've been able to tell my story and tell other stories, and frankly, get in the room with some really cool people. So, this is a few photos from our most recent event, which we did at New York Tech Week. New York Tech Week is one of the big Tech Week events that we do in America for these big cities where there's a lot of entrepreneurs, there's a lot of ecosystem building. We interviewed the Partiful founder, who is the founder of a really fun kind of half social media, half events platform. I'm actually an angel investor in that company. So this was a really full circle, event that, again, going back to our conversation around venture, like you can see how all these things do overlap as an investor in her. Now she's a guest on the podcast. In the room here, you have like all these amazing entrepreneurs in the photos on the right. Hopefully, one day I get to invest in someone who was at our event, and that would just be like the most amazing full circle. And so that's a lot about how I think about, me having an edge and how I show up in the market as well. Okay, I have talked a lot. I'm getting tired of my own voice. Are there any top of mind questions with everything I just said? Otherwise, I'll go into the key takeaways and we'll do question and answer time anyway.
Yeah, I have some question, but I'll wait until you finish.
Okay, perfect. We can do that. We're almost at the end anyway. Um, so, okay, VC, entrepreneurship, there's a lot to love about this career path. I'll also say it is difficult. It is a hustle culture. There is always other people getting started. I can find it a little intimidating. But here's a few ways that I've just kind of grounded myself in it. And I hope this is helpful for you as you're thinking about what you want to do. So for me, honestly, the bread and butter of this job is building meaningful relationships. It would be so boring if all you did was say, here's $1 million, here's $1 million, here's $1 million, right? Like, yeah, it's cool, but honestly, that's not the reason I do it. It is because the people that you are there building these companies with have incredible visions for the world and honestly inspire me every day. And then you get to do it alongside a partnership that is also incredibly thoughtful, super smart, way smarter than you. And just like you get to say, I want to learn from you every day. I'm a sponge. So that is truly, at the end of the day, what makes or breaks these companies. We can talk about AI and its disruptive force on the world. I wouldn't get away with having a VC conversation without mentioning AI. But honestly, like I really do believe in humanity at its core. And the complement of technology innovation coupled with incredible humans is really what makes venture capital one of the best asset classes in the world. It will outperform every time, in my opinion. And then how you get to be in the room is leveraging your unique perspective. Each of us have a unique perspective to share, your diverse background, how you've experienced the world. All of that should come into play on how and why you think this opportunity, this company, this team is going to win. And anytime I'm happy to talk about some of the companies I've backed that have gone to zero, some of the companies that, have gone to hopefully, billions of dollars. We'll see about that. But at the end of the day, it's a lot about having conviction, knowing what you think is a really interesting company and trusting your gut with a relative amount of risk. And then, ultimately, I think having curiosity and hustle is at its core to this job. Always ask questions. You have to always be out there. It's kind of an always on job, which has its pros and cons. But I think maybe one I'd add here too is like having humility. Like you're wrong a lot in this job, so it's important to just like remember that. I try to always have like a beginner mindset with things, which can help with that. Also, I hate being wrong, so that's definitely been a growth area for me. But that at the end of the day, that curiosity, hustle, and humility are really at the crux of what makes, I think, great VCs, and frankly, great entrepreneurs, great entrepreneurs. So that's all I had for us today on my kind of more formal presentation. So I'll stop sharing my screen and open the floor. Again, thank you so much for having me here. Thank you, Caroline, for introducing me to this awesome organization. Excited to keep chatting.
Great. Thank you, Madison. This is amazing. Thanks for sharing your story. And yeah, so my name is Abi Adioti. I've been working in the tech industry for about 35 years, from HP, Microsoft, Twitter, Airbnb, and so on and so forth. So I've been involved in WAAW Foundation since inception, and this is really great to have you here. So
Thank
I
you.
am very passionate about tech, especially for Africa. I wanted to get your perspective on, since a lot of the people here, they probably entrepreneur and they think about, okay, where do I get my funding from? And I've seen some pattern in Africa when you think about Florida Wave, Andela. We haven't seen a lot of IPO. We haven't seen IPO come out of Africa. At least from some of those firms, you think that they hit the unicorn level. How come they haven't IPO? And also, when I think about the funds, I've talked to E from the Future Africa and some other folks in that
Mhm.
space, and I'm kind of thinking that, yeah, most of these, maybe a lot of the startup that we have in Africa take a longer term for you to see your return. How does at least the US investor, or the international investor kind of view Africa? Do they view um, from an impact investor? I know everybody want to make money. How do you assess that to make sure that we're actually in this for the long haul, to be able to, because again, we also have the issue of scale. So how
Right.
do you think about that from somebody that's trying to raise money for their startup in Africa? How should they approach that? And how does the investor or the VC kind of think through some of this? Because if you go to Middle East or you go to Asia Pacific, maybe you can make more return. How do you determine where you go, and how do you go about doing this? Does
Yeah.
equity
Yeah.
something versus debt? Is that the trend that we're seeing right now? I
Gosh,
know
that's a big question.
it's-
And you've worked at some great companies. So I feel like, yeah, you maybe could answer the question better than me. I'm not an investor in global markets. I've actually predominantly invested in the US. So I don't want to oversell my ability to answer this question. I have like five friends that come to mind who are like actively investing and working in kind of the Africa region and where they're doing their strategy on investing. And so those people would be much more qualified because they've actually studied the fundamentals and have been more on the ground. I think the context for my answer here will be based on some of the studying I've done at HBS, and also I spent 2 weeks in Ghana last year, working on a team out and doing entrepreneurship there, which was really quite fun. I kind of got to see a little bit more on the ground of like how entrepreneurship can play. I think some of the ways to think about venture as a whole is through a historical lens. So, like when companies have taken off in the US as a market, it's been at different inflection points in the innovation curve. So, the internet, for example, being one of the key drivers of the early venture capital boom because it brought people online in an incredibly new and exciting way that birthed effectively the entire asset class. Even the roots of VC is through the Fairchild Semiconductor. The trader is 7 or 8, I forget the number, but they like themselves, that was really one of the early VC asset investments. That was like semiconductors, which is the crux of all that we do today. So I use it as an example to say in Africa, there has yet to be some of these fundamental shifts in adoptions at scale to create the consistency level that would birth venture capital returns. So until everyone is on the internet, or at least the internet is more ubiquitous in certain parts of Africa, certain countries, like my understanding is like it will be hard to have venture scaled returns until there are some of these like macro factors at play. Another is just like economic stability in certain components where an American investor or a global investor can say like my dollar at work here is like going to be returned as much as it would have been in Asia, which maybe other components have like different levels of stability, which was part of your question. So I think for like your perspective is like, how do I de-risk this opportunity as much as possible for a global investor? And you mentioned debt as an option. Of course, a VC is always going to say equity is better than debt, but to your point, debt is less risky, and so people might get more comfortable with a debt investment as a component to working with you because you're guaranteed that return, right? Like you can actually have rules in place, whereas equity is like not guaranteed. So I'll stop there because I risk on speaking over my own understanding level of the dynamics at play in this particular market. But those are some ways that I would use historical patterns that we've seen in more developed markets, and how, as an entrepreneur, I would wear that risk profile hat when talking to investors.
Great. Thanks, Madison.
Yeah, and I think the sentiment behind the question, maybe to open the floor to others, is like, gosh, like it is really hard to be an entrepreneur in Africa. There's not like 100 VCs down Sand Hill Road that are just like willing to give you $1 million because you dropped out of Stanford. Like, so fair. That's really annoying. And I agree with you. But it doesn't mean there's not incredible innovation to be had. And it isn't an incredibly exciting time. I actually think you can look at some of the big tech companies like Google, who have their next billion users campaign, which is like entirely focused on emerging markets and thinking that through, and this conviction that everyone will be online in this way and what that will mean. So I couldn't think of a more exciting time to be building cool companies where you guys are.
Yeah, you're right. I actually think that that's one of those things that I think a lot of the maybe American investors don't understand about Africa. I mean, over a billion people, 1.2 billion or so people in Africa. It's an open market that if whoever gets it first will be able to take advantage of that. So I guess part of it is telling the story, get them to see the opportunity. Again, of course, the risk is there, but I think that's more. There are more problems than solutions. So if you can get in there right now and actually be part of those people to enable those solutions, will be incredible, I think.
Yeah, and like I shared that timeline slide of the last 3 years that we've been in, and just if I'm learning about the market in this way, like if it's tight in America, like it's going to be very tight in Africa in terms of like how people are thinking about their deployment paces. And so I think it's been kind of a tough few years for everyone in terms of AI is an exception. I recognize that, but just like in general. And so that is also like, a huge factor. Okay, some more questions. More like, give me like a fun, that's a fun question, Avi, but that was kind of a macroeconomics question. That's like, oh, that's a little intense. Let's do like a fun question.
I see a question in the chat.
Perfect. Yeah. Okay. Thank you so much. I'm going to butcher your name. So I'm not going to try to say it, but it's so nice to meet you. And yeah, look, I mean, venture fundamentally was built to invest in hardware and software. And so if you're thinking about building a company that touches technology, VC is going to be a more attractive type of investment opportunity for them. Because taking a step back from like how the returns work, people often call it a power law, which is the idea that like you're going to invest in 10 companies, and for every 10 companies you invest in, nine are going to go to zero, and one is going to be worth so much money that the nine that went to zero doesn't even matter. And that kind of profile of investing is really geared towards these SaaS internet software companies, which are very asset light, have high gross margin, and can return on a relative basis with less cash. Now, frankly, that's kind of shifting with the whole compute thing and how much people are talking about like GPUs and like the need to have hard infrastructure again. So the fun thing about this question is I probably would have had a different answer 5 years ago, which is why I think this job is like really interesting. But because like hardware was kind of out of vogue, but now hardware is kind of back in vogue because people are like, oh, we need to make chips again. I digress. That's really how VCs can think about things. Someone mentioned raising $1 million for a farming business. I love that. Absolutely, you should build a farming business, especially I think if that's something that your local community needs, of course. That is less likely to be a venture capital investment because it doesn't scale exponentially. For every seed you plant, you get back a plant. Like that, it's a one-to-one growth. There's some ways to scale in the sense that you can have machinery that you can have across, multiple acres and things like that. But it's not really the type of profile of that power law exponential return a VC is looking for. So just if you're thinking, why aren't these VCs liking my startup? Ask yourself, is this like a 10x, 100x company that's going to cost not a marginal dollar to get to that 10x from this initial investment opportunity? But you also have to do what you're passionate about, by the way. So don't let the VCs be the harbinger of like good or bad, like whatever, this or that. Like if you want to do something, if this is what you want to do with your life, you should do it for sure. But like Abby mentioned debt, like maybe you want to raise debt or maybe you do a Kickstarter. Like there's other ways to raise capital. I think the biggest mistake entrepreneurs make is assuming VC dollars is the only dollars in the market.
I have just a general question. This might not be specific to the continent of Africa, but you mentioned how a lot of venture capitalism is about, networking, getting out there. And I think as someone who's grown up in San Francisco, obviously I've seen that, and I'm sure it exists on different scales in other parts of the world. So I guess what are your advice for like getting out there, meeting new people, and forming actually long-lasting connections instead of kind of like superficially growing your network?
Yeah, that's a hard one. I mean, hard because it's easy to slip into the like superficial, And so, when you're tired, it's been a long day, you kind of just have to like work to be authentic, I think, and like give a little bit of yourself with every conversation and like try to be, who you really are to your core without having like this like overly like personified idea. And then, yeah, like follow up with people, just like treat it more like a friendship, even if it's a workship, and kind of have that care mindset. That's my approach. Honestly, I feel like everyone has different styles with this, so I don't know if there's a universal right answer. But I think actually because there isn't a universal right answer, it's just really important that you're authentic with it. Um, just go, yeah. I think I don't know, Caroline, did I answer your question there?
Yes, thank you.
I feel like I could have given like more tactical things. Go to the happy hours, uh, follow up on LinkedIn, you know.
Mhm.
I think maybe if you're a junior person, which I'm kind of striding this career moment now where I'm like kind of junior, kind of not, I don't know. And so you're below someone and you're asking them for advice. Do them the favor, like reach out to them, bug them in their
Mhm.
inbox, send the thank you note. I think that's really important. I've been the recipient of that, like on having and asking for advice from people. And I just think it goes a long way. And now that I'm a little bit on the other side where I have people that are reaching out to me, like I just appreciate, like I'm really like behind on my inbox, like always. So it's not annoying
Mhm.
to have someone follow up. And it's nice when they send a thank you note because I like remember, oh yeah, we talked. That was great. That wasn't just like one of my
Mhm.
15 calls that day. So just
Yeah,
as you're approaching growing your network, especially on the junior side, be really vigilant with those people that you like and are excited about getting to know and keeping getting to know. Of
perfect. Thank you.
course, you guys can throw more things in the chat. I think we have a few minutes left.
Well, while we're waiting, so did I, thanks again, Madison. I think the other thing, in addition to, again, somebody probably, VC probably won't write a check for 1 million for agriculture because of the, doesn't have the multiple or the kind of expectation that they're looking for. But there's debt, there's some other alternative, financing that one can look into. And there are companies, I think they're called the Catalytics Capital, FSD Africa is one of them. They absorb debt, so it kind of help mitigate some of the risk, could kind of guarantee, your return. Like if somebody invests, if an impact investor invested in your idea, and that thing fails, so they guarantee like a minimum loss. There's some of those things out there. So again, don't get discouraged if you can't get money from VC, but that other alternative, you won't just have to get creative on how to go after it. So more importantly, go after your passion, do what you love, and there are ways to find some funding. It may not be $1 million, upfront, but there are some
Yeah,
funds out there.
exactly. And that's the last thing I'll say for any budding entrepreneurs in the room. Some of the best entrepreneurs I've seen are just obsessed with what they do, right? Like sometimes I don't understand why people are obsessed with this like niche technology DevOps tool. Like honestly, couldn't get me out of bed, but it's cool that it gets you out of bed. And like I love that. And like that passion comes through. Like I don't need to understand everything about what you're doing for me to know you're really passionate about it. And that to me is like a huge indicator of your ability to be successful. Because if you can work 22 hours a day on something as boring as what I think that is, like, or whatever it is, like, great. Like, all the better for you to go do that. And I'm sure there are things that I do every day that people are like, lame, wouldn't want to spend my day on that. And that's totally fine, right? That's going back to that, appreciate your strengths and own your strengths component. And I know each of you have those. So I am very reachable. I am a little bit chronically online. So, find me on LinkedIn. Would love for you to check out the podcast. Hopefully, some of those stories inspire you. And I'm just like, let me know if I can be helpful in any way or if you're ever out in San Francisco.
Well, Madison, I'm in San Francisco, so I might look
Ah,
you
well,
up.
let's meet up.
Okay, sounds good.
Perfect. Yeah, wait, that's so fun. Let's do it.
All right.
See, look, guys, we're already networking on this call. Look at that. Practice like you play.
I think I have an unanswered question in the chat.
Oh, is there another one?
Yeah, in the chat, I asked the question. Or probably I should just go ahead to ask.
Is this the investing in other industries and advantage one?
Yes, yeah.
Yeah, I just tried to cover that when talking about kind of software, hardware versus, like the agriculture example. Um, So I think if you wanted to drill down more into software, I mean, AI infrastructure right now is very, very hot. Application layer investing, so the like ChatGPT or like companies like, that in terms of how it's impacting people's ability to use AI in their day-to-day lives. One that I'm using right now is called Delphi. It's really fun. It's a digital clone of yourself. It read all of my podcasts, all of my posts on the internet. It found 260,000 unique words. Cannot believe I've said that many words on the internet, which is absurd. And it turned it into a Madison chatbot. So I can share that with you guys if you want it. You can just ask me any questions. It's literally my brain. And you guys, that last takeaway slide, I put through that chat. I was like, what would be the three key takeaways from Madison on breaking into venture capital? And that's what it gave me. And I was like, that's pretty good. I'm gonna put that in the slide. I edited a little bit, but anyway, that's like one example of a platform that people are investing in. So hopefully that's helpful to your question. Of
Yeah, thank you.
course. Well, I have to go here at the top of the hour. So in that vein, maybe we can wrap up, Jessica.
Thank you very much, Madison. Thank you very much, Abia DOT and Caroline, for your questions and for engaging with the section. I don't think we have any more questions. So yeah, I think we can call it a day at this point. Thank you very much for joining us. Okay, please, before we leave, let's have a quick photo, please. You can turn
Great.
on your video if you're not on video, so we can have a quick photo. Thank you. Okay, I'm not seeing a lot of us. Chidima, Lillian, Mesoma, please turn on your video.
All right, we got to run.
Hear me? Still not seeing some people clear. Oh yeah, I'm seeing Mesoma now. See Lillian. Okay. Got that. All right. Okay,
Thanks for
thank you
joining,
very much
everyone.
for joining us today. Thank you for joining us. Thank you, Madison, for speaking to us today. We would love to hear from you again in the future.
Definitely. Thank you so much for having me. Thanks, Caroline, for the opportunity. And good luck, everyone. Can't wait to see what you build and what you do.
Thank you.
Thank you, Madison.
Bye.